to the workshop and the webinar, and it's time to get started. So we really appreciate you being with us right on time today. Traders have registered literally from all around the world, so wherever you happen to be, I hope you're having a good weekend, and also hope you're away from any virus problems. Things are getting better, I think, and so maybe there's light at the end of the tunnel with this COVID thing. This is Craig at Max Trading. Chris is here and Eusebio is here, and we're very glad to include you within the Max community today. Many others will be joining us later, participating by video. We thank you for that, and we welcome you as well. If you happen to live in the U.S., and I suppose now in several other parts of the world as well, you're facing a lot of problems with inflation and all kinds of things that people need, like groceries and home products and energy expenses, things like that, building costs. That can make it pretty difficult, and we love having the opportunity to show you an effective trend following system that can help you to boost your family income. We think it can be a really huge help to a lot of families. And for a value-added bonus today, Eusebio is going to teach 3 really important trading tips. So I think this is going to be a very helpful webinar for all of us. And even if you have attended previously and you've seen these tips before, believe me, the review and the reminder is helpful, because these are things that can help our trading immediately. So as we get started today, I would like to just remind you of 5 things about the Max trading system. First, this system has proved itself over a period of 15 years. This is not a newbie in trading systems. Market conditions have changed over those 15 years, and the system has adapted to those changes with some new and some very important methods. But the root core of the system remains the same, just as it was 15 years ago, and still very, very effective. And number 2, throughout those past 15 years, Max Trading has maintained a 4.7 star rating. I'm sure you realize that is not an easy accomplishment, and it's very exciting to me that after all these years, Max Trading System is still at the top of the ratings. And number 3, the training you receive as a Max member is unexcelled by anybody, and I mean that literally. 15 years is a very long time, and we've had lots of practice at teaching the system. We've become very, very good at helping traders learn how to take advantage of a great trend following system. So you get everything as a Max member, and there are no hidden expenses. I hope you can take advantage of that. The system is included, of course, the training, the indicators, the templates, lifetime support, 3 skill building workshops every month, all year round. All of that's included, nothing extra to purchase. And number 4, this is a remarkably flexible system. Learn it, and you can trade just about anything. YM, ES, Forex, NQ, DAX, options, whatever is a market that you enjoy trading or that you like trading or you seem to favor, you can do it, and you can do it on any time frame without limitations. And last, number 5, become a Max member, and you will learn how to trade the trends from a very good coach, highly skilled, world-class trader, Eusebio Nani. With a great system combined with a great coach like Eusebio, you are in the best possible scenario for moving on to trading success. And that's what we want to see happen for you. We understand that you run across a lot of claims about various trading products, and many of them are totally unsubstantiated. And so really and truly, we don't expect you to just take our word for it. We want you to see for yourself. So I strongly encourage you to plan on attending or maybe watching the playback of the live trading session that's coming up Friday, the 4th of November. And there we will trade the price action in real time resulting from the non-farm payroll news release. You'll get to see for yourself the effectiveness of max trading methods on live real-time charts. And I really like that because nothing can be exaggerated. It's impossible. And nothing can be hidden. Everything is out in the open right there on the chart on your screen for you to see and to understand the effectiveness of the system. I will send you a link for your free seat, so watch for that in your inbox. And if you can't make it, then of course I'll send the playback video for you, and that still will be very helpful. So thank you again for attending today. We really appreciate it. If you have questions, we want to answer them. You can ask anytime. Just use the question panel right there and go to webinar. We will make sure that every question receives an answer. And by the way, the door prize drawing will be coming up during that Q&A time. Please hang around for your chance to win a Max Trading System course. And for those who can stay with us until the webinar ends, I have taken the habit of making it worth your time to be there. I promise I will do that again. Be worth your time to stay through to the end of today's webinar. Many of you do understand the value of a great coach, and that makes Eusebio the perfect choice to give us all the details about max trading. You're about to hear a phenomenal trader, a very skilled teacher, and I honestly believe that even in this webinar, you will sense the satisfaction that he enjoys just from helping his fellow traders. So thank you very much, Eusebio. As always, we appreciate it. Thanks for sharing your time, and the microphone is yours.
Thank you very much, Craig, for this introduction. Hello, everyone. Welcome to this presentation of the Max Trading System. I hope you are all fine, all safe. And so I also welcome the attendees who have registered and who will watch the recorded video. And as Craig has said, it will be made available to everyone having enrolled to this presentation. So let me first of all give you a first word about who I am. So as you can recognize through my accent, I'm not an English or an American resident. I am in fact a Belgian trader living in France, full-time in France. And I am a Max instructor since 2009 after its founder, Dr. James Pruitt, passed away. And at that time, I was a part-time trader, especially in the Forex market, even if I have been interviewed for around 40 years now in all the other or many of the other financial market. Of course, not only the currency market, but also the futures market with indices, commodities, and so on, but also the stock market and the options market. And I became a full-time trader in 2008 when I took, or after I took the course with its founder, so James Pruitt, called also Tiger. So my past activity was being a service manager in the IT industry, and I have practiced that career for around 30 years. And the last 15 years, I have had the chance or the luck, the opportunity to work exclusively with banks, so here in Europe, sometimes with big banks, so in France, Germany, Switzerland, Luxembourg, Belgium, UK too. And this has given me the opportunity to observe and to talk with some bank traders. And this is why we can explain why the concept of the max trading system are working. So when the market is, or the market are trending. So, but this is enough for me. And so now let's talk about the max trading system. The max trading system is a trading system or a method, a trading method, which is perfect for everyone, whether you are an experienced trader looking for consistency or more consistency, or if you are already a profitable trader but you want to multiply your profit, but also if you need a reliable trading method because you are a newbie, and when I say newbie I mean a new trader, or you are still struggling to become profitable, because it's extremely difficult to be profitable trading any market, by the way. It's not enough to have a trading system, but to have a trading method or methodology, a trading process to become so profitable. And so you can trade for any kind of objective. You want to work at home, for example. Trading is ideal to work from home. You can plan to retire. You can to try to generate extra income. So whatever the reason, so a system like the max trading system is ideal for you. And as I have said previously, the max trading system has been created many years ago by late Dr. James Pruitt, known as Tiger by his student and his community. And the MAX is an acronym for three important concepts. The M of the MAX stands for momentum. Indeed, we want to take a trade only when we are sure that there is enough momentum and enough volatility, of course, also. The A of the MAX stands for acceleration. And this does not mean that we need to see the price accelerating. But acceleration means here increasing the profit through an appropriate scaling process when all the conditions are appropriate, of course, and I will come back to that idea later, in order to generate more profits from the same trend, and sometimes in a very important amount. And the X of the MAX stands for exit. At some points or several points along a trade, we will have to consider exits, and we will have two types of exit: a short-term exit and long-term exit. A short-term exit, as I will illustrate later, will be a partial exit, and a long-term exit will be a total exit. We will close the remaining opened position. Hello, Michelle, welcome. And so the MAX, as Craig has explained, is essentially a trend-following method. In the past, it was also considering how we can trade a counter-trend movement. But this is no longer the case because we have adjusted, we have adapted due to some change in the market. So we have adapted the max trading system in such a way that we almost never see counter-trend movement in the way we analyze the movement now. But the max trading system is also associated with a very, very strict trade risk management and money management rules. They are part of important pillars in any trading methodology. And as Craig has already mentioned, so the max apply to any market and to any time frame. So starting from the 1 minute time frame to any time frame you want, up to the 1 month time frame, for example. What I'm going to show you now, just to illustrate the power of the max, is I will show you some charts, some example of trade, and it will be an opportunity for me to explain some of the concept of the max. So, but before that, and just to thank you for your presence today, I would like to teach you and show you 3 tips you can use immediately in any trading system. And when you use them correctly, you will see your profits or your results improve almost immediately. So, and these 3 tips are: how can we exploit a divergence, and what a divergence means, how we can exploit a long bar, by long bar I mean a long candle, and how can we reduce the risk while we are in a trade. And by combining these 3 tips, when they apply, of course, along a trade, so you will improve your results. And so let me illustrate first of all the concept of a divergence. You probably know already what a divergence is, but here with the max we use the divergence concept in a complete different way. But basically the divergence is always comparing the price itself with a momentum oscillator. The momentum oscillator is not important by itself. On this chart, I'm using the stochastic of the RSI oscillator because it is not too fast, not too slow. It is just appropriate for our need. And when the price is moving in a downtrend and we observe two successive lower lows, but in the oscillator we observe 2 successive corresponding higher lows, this is what we call a divergence. This is just one kind of divergence. There are many other types of divergence we explain in our courses. So, and a divergence is always an indication of a loss in the momentum of the price itself, because the oscillator is itself a momentum oscillator. And the momentum is a way to appreciate the speed of the price. Now, the way we use such an indicator is, and I will re-explain that later today, is we do not use it to predict what the price will do. But I will explain that more in details in a moment. But here in this example, as soon as we pinpoint a divergence, for example, this happens at the close of this blue candle, we define an exit level just to be sure that the buying pressure is still present. And if the price indeed follows through and hits our exit level, we make a partial exit. For the partial exit, you can close 1/2, 1/3, 1/4 of your running trade. The portion does not matter in reality. It must be just a portion. And in the macro trading system, we use a specific portion I will explain later. In this case, this first divergence helps to catch a profit, a partial profit of 13 pips in the 5-minute time frame of a pair which is not necessarily always very, very volatile. Later on, we pinpoint again two successive lower lows and two corresponding higher lows in the oscillator, momentum oscillator. And so this is another opportunity to consider another partial exit if the price follows through and hits our exit level. And later on, we see again two successive lower lows in the price and higher lows in the oscillator. And this is another opportunity for another partial exit. In this example, should we have closed for each divergence 1/3 of the entire position, so this trade has captured a total of 67 pips, representing, because of a stop loss size of 22 pips, a reward to risk ratio of plus 1.02 R's or plus 1.02 to 1. The R notation is the Von Tarp notation representing the risk we take on the trade. Another way to explain the risk is the following. If we associate with this trade a risk of, let's say, 2% of the trading account, this means that that trade produces a profit of 2% times 1.02 or 2.04%. Another way, which is used by many traders, is let's suppose the risk we take on this trade is $100 at the close of the trade, so we produce a profit of $100 times 1.02 or $102. So this is the meaning of the reward to risk ratio we use. So this is an example of a divergence in a downtrend, but of course in an uptrend we will compare this time the successive highs in the price with the corresponding successive highs in the oscillator. We want to see higher highs in the price and lower highs in the momentum oscillator. And again, whenever such a divergence is pinpointed, we define an exit level, and if the price follows through and hits that exit level, we make a partial exit. And so we will have similar kinds of trades, so using this kind of divergence. Of course, you should never use the divergence as a unique exit technique. You have to combine several exit techniques together to make optimal exit along your trade. But the divergence is a very powerful technique to catch some profit. And by the way, because we never use a divergence to predict what the price can do in terms of a possible retracement or pullback or even deep pullback, this is never a guarantee, of course. The divergence is used, or any exit technique is used as a way to quantify when the price is retracing too much in such a way that the retracement will become an important risk for the trade. And so we have to control that risk. The second tips you can use in association with any exit technique is the following. You see, my initial stop loss on this example was 28 pips. And so in a 5-minute time frame, this is a typical stop loss size. Sometimes we may have a smaller stop loss. Sometimes we need to have a larger stop loss. But along the trade and along the trend, as long as the price moves in our favor and at least a portion of the trade is still opened, we can, through specific rules, and you may have an infinity of rules, many rules are possible, you have to consider adjusting your stop loss in such a way to reduce the risk on your initial trade. You can observe in this example that after the first partial exit with the first divergence and the stop loss adjustment, we have so made a profit on the portion of the trade we have closed, but the stop loss is also at the level, in this case it's a coincidence, of course, but it is even a little higher than the entry level. What does this mean? This means that the rest of the position, for example, 2/3 of the position now is break-even, or at least break-even. So this means that the remaining position has no risk at all. And so what may happen at best is the price continue to move in our favor, and as long as we can continue to adjust our stop loss and make other partial exit, we will improve our result. The worst case scenario, of course, is the price after the first exit will reverse violently and hit the stop loss. But even in this case, because the rest of the position is risk-free, so there will be no loss, and instead we will have a minimum guaranteed profit with the first exit setup. So the best which can happen is to improve the result, which has been the case in this trade with a total number of pips of 372 pips, which was an exceptional movement in the 5-minute time frame. And because of a stop loss of 28 pips, this represents a reward to risk ratio of 4.43 R or to 1. So a partial exit and a stop loss adjustment are two important mechanisms to reduce the risk. And the divergence is one of the numerous exit techniques we can use. Another very useful exit technique, which is very, very profitable, and this happens very frequently, is when the price moves in our favor, making what we call a long bar, LB in abbreviation. And what is a long bar? A long bar is a candle having a length, and the length is always measured from the high to the low, so the two very extreme prices of the candle, the high and the low, not the open and the close, the high and the low. And it is a long bar when this length is minimum 2 times or larger than the average length of the previous candles. You can take any number of candles you want, of course, to define that average length. In the course, we will teach you a very useful technique how to appreciate a long bar. But a long bar, most of the time, can always be eyeball. So you will recognize immediately without any measurements that a candle is making a long bar. When its length is excessively longer than the previous candle, you will be sure that it is a long bar. And why is a long bar a very nice exit technique? In some circumstances, a long bar can indicate a strong momentum. But for that, we need to appreciate the activity of the price action in terms of volume, which in the Forex is quite impossible. And you remember that if you trade the Forex with a platform like MetaTrader, you have only the tick volume of the broker, and the tick volume is not the volume handled by this broker. The tick volume is simply the number of price quotes the broker sent in your data feed. And it's not because we have a price quote that we have a trade. This is not the case with a retail broker. So we don't know if a long bar is indicative of a big momentum or simply indicating that the price will retrace, a poor price action, in fact. And we observe for many years now, in fact, since we are exploiting the max trading system, that a long bar is followed by a pullback, sometimes a small pullback, like this one here, sometimes a deeper pullback, sometimes even a trend reversal 2 out of 3 times. And so 2 out of 3 times, so the price will retrace. And so why not using the long bar as an opportunity to take some profit if the price retraces? And how do we do that? So once the bar closes and we have recognized it is a long bar, we define an exit level, and this exit level can correspond to a portion of the length of the long bar. It can be 1/4, 1/3, 1/2 of the long bar. You decide which portion of the long bar you want to exploit to define your exit level. And if the price follows through and hits your exit level, you make again a partial exit. And this partial exit alone, associated with a stop loss adjustment, most of the time, I will never say always, but most of the time, will make your trade risk-free or almost risk-free. It depends on the size of your partial exit. So And so whenever you have a long bar, you have to consider that possibility for a partial exit. 2 out of 3 times is way too much important to neglect that possibility. So the long bar exit technique, the divergence with a momentum oscillator exit technique, and the stop loss adjustment, which helps to control the risk we have on the trade or the remaining risk we have on the trade. So when you apply this kind of technique to your trade, you will improve your result very significantly. Because after all, a divergence happens very frequently. A long bar happens several days in a time. And the stop loss, you will have always opportunities to adjust the stop loss, provided the price begin a trend, even if it is a small trend. And what is a large trend, what is a small trend? It depends how we define a trend. And I'm going to explain how we define a trend within the MAX now. So now let's consider the MAX trading system itself. Of course, if you have any questions about what I am presenting, feel free to post your question in the question panel of GoToWebinar, and after the presentation, so we will be glad, Chris, Craig, and myself, to answer your questions. And so when we consider a trading system, we have to consider several aspects, and I consider that there are 5 essential pillars which are necessary to define a trading system. We need to have, first of all, a trading strategy. We need to have rules to open a trade, to close a trade. We need to have, associated with the trading strategy, a very strict trade risk management and money management approach. We need to take into account the global context analysis, because the global context analysis, whatever you may hear here and there, the global context analysis is always, or provides always, with the driving factors in the market. There are always driving factors in the market. By the way, if you observe the calendar for the coming week, so we will see 3 central banks having their meeting. The Bank of Australia, the Bank of England, the Fed, the Federal Reserve, and furthermore, on Friday, we have the non-farm payroll. These are extremely important driving factors in the market. And depending on the decision of the central bank and depending on the non-farm payroll Friday, we can see a very, very important movement or nothing at all. So then we need also an appropriate mindset, because there is also a psychological aspect in the trading process. So because simply we are human beings and we have to overcome our defaults, our fears, fear of losing a trade, fear of losing opportunities, fear of success sometimes. And then if we want to make a living from trading, we need also a very specific organization. So today I'm going to focus on the 3 first aspects of these 5 pillars. And so let's illustrate this concept with some chart. So as you will see along this presentation, today we will propose you 2 of our courses, which are called the Max Primer course and the Max Standard course. And these 2 levels defines how we can fine-tune the trades along a trend. And so in order to define a trading system, we need to define what a trend is, how we can recognize the start of a trend, how we can define a trade along that trend, and how we can define when the trend exhausts or reverses. So it's not because the trend will exhaust that the trend will necessarily reverse. And this is a nice example. After a nice trend, the price has begun to range until the next directional movement will happen. And so a trend is always defined in combination with what is happening in a higher time frame. And for that, we use what we call our companion indicator, which is a bias, a directional bias indicator, which is represented in green and red at the bottom of this chart. So, and when this indicator, which is called the slow bias, is green, we consider we are in an uptrend. And when it is red, we consider we are in a downtrend. And in order to recognize the beginning of a new trend, let's take, for example, this uptrend, you can see that this green color of the slow bias nicely helps to identify this uptrend. And in order to recognize the beginning of the trend, we need to recognize one of the patterns which define the beginning of a trend. And in the MAX, we use 3 such patterns. And the pattern is not enough, of course, to recognize the beginning of a trend. The pattern must be validated. And there are several ways to validate the pattern. First of all, a technical validation. We want to have some confirmation using some technical indicator just to be sure that there is enough momentum and enough volatility. Then we need to consider the risk we can associate with the trade. So the risk analysis is extremely important. If we have, for example, a too large stop loss, more than 50 pips in the 5-minute time frame, we will consider that the risk is not worthwhile, because we will need a way larger movement of the price to make a decent profit on this trade. And then we need to check that the trade is in agreement with the global context. That day, after having analyzed, and you can see it was a few days ago, so the 25th of October, I think it was Monday. So after having analyzed the global context, and what is the global context? The global context is, or consists in analyzing the central bank decisions to see their influence. Lyle, LB means long bar. This is one tip I have just explained a few minutes ago, okay? Long bar, which is always an opportunity for a partial profit. You're welcome. So we analyze the decision of the central bank to see the influence of the central banks on their own currencies. Then we analyze the news release, of course, because over time the news release, when there are big surprises, influences the direction of the price or the direction of the currency. And when you know the direction of each currency, you know the direction of each pair. And so we analyze also the consequences of the geopolitical event. We are living for several years now very important geopolitical events, the Brexit. If you remember, with the Brexit, all along the negotiations, which have been very long, 5 years almost, so that the pound pairs were very volatile. We have seen the consequences on many countries and many economies and so many currencies, the consequences of the COVID. And now we are seeing also the consequences of the pile of debt the world is facing, and some dramatic events we are observing in between Russia and Ukraine, for example. And so all these geopolitical elements have also an impact in the market. And it is by analyzing all these elements that we can define every day a directional bias for each pair. And this comes from the analysis of the bias for individual currency. And that day, the bias for the pound US dollar was to trade long the pound US dollar, especially long the pound, and the US dollar was engaged in a retracement simply, and this is perhaps what we will see also this week before the Fed meeting on Wednesday, because the market expects a more dovish than hawkish position or tone by the Fed. This is why we see the US dollar somewhat weakening. So long position for the pound US dollar, and so the trade was a long setup, so it was in agreement with the global context. And then the price, once the trade has been opened under all these conditions, so the price has almost immediately moved in our favor. And on this long bar, as I have explained a few minutes ago, the long bar was a good opportunity to take a partial profit. In the max, we always consider that when we open a new trade, we calculate the trade size, of course, based on the stop loss size and based on the risk we allocate to the trade. But we always consider that the trade is made of 2 units in such a way that when we have to make a partial exit, which is noted MX or momentum exit or partial exit, we close 1 unit. So practically we close half of the trade size. And then we keep 1/2 of the trade size open. Of course, in the meantime, we also adjust our stop loss. In this case, the stop loss would have been adjusted in this area, making the second unit even looking some profit. And later on, we had another exit setup. So here, not that we have again a long bar here, but this long bar would have not triggered the exit level. Because, of course, when we decide an exit level, if the price followed it and hit that exit level, we make a partial exit. But if the price does not hit the exit level, we keep our unit as an open unit, as a running unit, which will provide more profits at the end. And so here we had another exit setup, forcing us to close the second unit of the trade. So, and the trade has made two nice partial profit, 72 pips and 140 pips, for a total of 212 pips, or representing a reward to risk ratio of 4.4 to R's or to 1. If you take a risk of 2%, this trade alone would have produced a profit of 8.82% on the trading account. And so you can see that with the max primer level, the max primer level is a very simple subset of the max trading system when we make possibly a partial exit after an entry and then a final exit. So no scaling technique. But the same movement handled with the max standard, which is the second more advanced level of the max, so which is our flagship course. So now, after the initial entry, which is the same as with the max primer, we had an opportunity to make a scaling, which is noted SC1 for the first scaling. And a scaling consists in adding 2 units to our position to build progressively a larger position. Of course, this scaling itself introduces risk, and so we have to make the scalings very, very carefully. There are very strict conditions allowing to make a scaling. So there are not so many possible scaling. In this example, we have 3 possible scaling. After the scaling number 1, we have the partial exit X1. We close 1 unit, so we are left with 3 open units, 1 of the initial entry and 2 of the scaling number 1. Then after that first emit, we make a second scaling, adding 2 more units. So we are now with a position containing 5 open units. And then we had a third scaling opportunity before a partial exit. So in this case, I have used a smaller tolerance for the long bar, in this case, just to be sure to bank a profit after this long bar. And then we had another partial exit with the MX number 3, partial exit number 4, partial exit number 5, and then with the trend reversal, partial exit number 6, and the final exit where we were left with 2 open units. And so with this total exit, or final exit, we close the 2 remaining open units, which has happened when we get an entry setup, a short entry setup with this trend reversal. So because it is not because the stop loss turns from green to red that we have immediately to exit the trade. We need to wait for an entry setup, so in the opposite direction. So by the way, in this example, the entry setup was called safe and perfect Mo. Mo means momentum entry, and it is one of our entry setup we can use at the beginning of a new trade. And so 1 initial entry, 3 additional scalings, 6 partial exit, and 1 final exit, producing a total profit of 566 pips. So not exactly 3 times the result of the max prime, but not too far away from 3 times, and a reward to risk ratio, similar reward to risk ratio, so 11.73, almost 3 times than the reward to risk ratio of the max primer. So a pretty good result. With a risk of 2%, this trade alone represents 23% profit on your trading account with just 1 trade. So this was the pound US dollar, which is a very common pair on the Forex, but we can use also other pair. A second example was the Euro AUD in a downtrend this time. And so you can recognize a first trade with the initial entry here, partial exit with the MX1 here, total exit with the XXX1 here, and then the second trade, REMO number 2. REMO means resumpting trend, second partial exit, second final exit, and then a third trade with exactly the same structure. And so this trend has provided us with 3 trades, 2 profitable trades and 1 small losing trade. The trade number 2 with the REMO here, the MX number 2 and the XXX was a losing trade because the movement were not large enough. So, but you can observe that the loss is a very small loss. And this is a very important characteristics of the max we will have losing trade. We don't have a 100% winning rate. We have, depending if we use the global context or not. Without the global context, we have a winning rate around 70-75% and around 15-20% of losing trade. But each losing trade is always a small loss. And I will give a little more result about these kind of numbers. So here a total of 80 pips for a nice, a decent 2.67R reward to risk ratio. But now this same trend with the max standard has allowed to make only one trade, but with several scalings. In total, we had one initial entry, one scale-in, two scale-in, three scale-in, four scale-in, five scale-in, and after that there were no available additional scale-ins, and then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 partial exit, closing 10 of the 12 open unit, and the 2 last open unit have been closed at the trend reversal, so here with the 2 remaining open unit. And so in total, you can see 453 pips for a nice 15R reward to risk ratio. So, do you know that professional traders do not use this type market profile and a DOM price ladder to see the actual bid-ask volume trades? You cannot see the actual trades in bar. Maku, you are not exactly right. Indeed, there are many tools you can use. And what do you call professional traders indeed may use the depth of the market price with the DOM, which is the order book, and market profile. But market profile is simply another way to observe how the price and the volumes are moving. And with my experience in the bank industry, I can tell you that the traders in the banks use also technical analysis. So, and they use technical indicators, they use moving averages, they use possibly market profile, they use a large variety of tools. And two banks may have different set of tools they may use. And similarly in big hedge funds. So don't be focused on one specific tool. It's not a specific tool which will give you the secret to become profitable. A tool, whatever the tool you will use, maybe the market profile or an indicator, a usual technical analysis indicator, is simply a way to time your trade or to appreciate a risk when the price is going against you. But nothing will help you to predict what the market will do at each moment. It's not because the global context analysis tell you to trade short that you are 100% sure that the price will go short. And it's not because the market profile give you some specific price levels that you have a guarantee that the price will reach these levels. And if you follow a course on the market profile, you will see very complex situations even the market profile cannot help to solve. And so they are simply tools which help to time and possibly give some possible profit target. But that's all, okay? And so do not make too much focus on these individual tools. So I have illustrated the max with 2 pairs, but we can trade other instruments with the max, like, for example, stock index. Here I'm illustrating with the Dow Jones, and you can see that with the max primer, we have exactly the same type of trade structure, and you see the kind of result. And with the max primer, this down movement was a unique trade with several scale-ins, and so several exits. And you can see that the result has been, again, improved by almost a factor of 3. And this is typically what the max standard will provide. It will provide a result between 30% and 300% larger than the max primer result due to the scaling and scale out technique. And this is an example with gold, which is a commodity. And so the trades have exactly the same kind of structure. So with each max courses, you will get, in fact, a trading method and concepts that work. And I explain along the course why these concepts are working. What I have shown you is just a very, very small subset of the max, and why these concepts are working in relationship with what the big boys are doing in the way they handle their position. So you will get also training and support to reinforce your trading skills and your money management and trade risk money management. And Chris will talk a little more about these points so in a second. So, and the max will also provide, and this is extremely important, confidence in your skill. Because on the psychological aspect, so you need to build confidence on several levels, confidence in the market itself. And if you scroll through chart, you will see whatever the pair, whatever the time frame, that the market always provides nice opportunities. And the problem is to recognize these opportunities and to exploit these opportunities. And so confidence in the trading system you will use, so in this case, the max trading system, in the ability of the max trading system to catch most of all these opportunities the market gives. And then confidence in yourself, in your way to apply correctly all the concepts and rules of the max. And so we provide a lot of mentoring, a lot of homework. Each training session is always completed with a homework assignment, which is a very important aspect of the training, and the homework has the aim to help you to validate that your understanding of the max is correct. And then we have each weekend, free workshop for our members. Chris will talk a little more about that. And so today we propose you two of our available courses, the Max Standard and the Max Primer, as I already explained. But in order to help our traders to become more successful with the max by better understanding the global context, we also provide, and this is for free, some elements of the global context. And so among the global context, we provide every week a list of geopolitical elements we have to follow just to observe how they will evolve by escalation or not, and so to define the consequences on the markets. Then we provide a simplified economical calendar in which we focus only on the news which are really important. Because if you observe a calendar, there are a lot of news every day, but many of them have no impact in the market. And we provide only those news which, in case of a big surprise, will create important movement in the market. And then we provide also a list of the best trending pairs in the Forex market, because the max is a trend following system. And so we need to know which pair are the best trending pair. So we call that the top pair list. And then when we compare this top pair list with the previous calendar containing only the interesting news releases, we can provide a suggestion. Oops, I went a bit too fast. So we can provide, I think, we can provide for each day of the coming week, so a list of pairs which we can monitor in priority. Because if there are big surprises in the news, in the calendar, so these pairs will move the best most of the time. And in order to get one step further, we also provide an additional service which is not free. It requires a small monthly subscription. We provide, when we day trade, we call that short-term bias, the max bias advantage, which is a synthesis of our global context analysis, which helps us to define in which direction we have to privilege our trade. And so we follow a certain number of Forex pairs, we follow a certain number of international stock indices, 2 commodities, crude oil and gold, and 2 bonds, the US 10-year Treasury bond and the Euro bond, plus also the VIX, which, as you know, is the volatility index of the S&P 500. And so we provide for each day in which direction to trade. Green up arrows means we have to consider or privilege long trade on the corresponding instrument, and down red arrow indicate short trade. And the number of arrows indicate the strength of the bias. We provide similar bias for long trade also, but I will not talk about that so here. And so for our MAX member, we provide even a more detailed analysis of the coming week. We call that the global outlook. And this comes from the analysis of the global context, of course, and for each individual currency, we provide a strength, and higher is the strength, stronger is the currency, smaller is the strength, weaker is the currency, and we indicate in which direction during the coming week we have to consider each currency. And when we observe these directional bias for each currency, we can provide also some ideas of trades. And we provide also same directional bias for the stock market, gold, oil, and the Bitcoin, so, or cryptocurrencies. So, and this week will be interesting in terms of directional bias, depending if the US dollar will become stronger or weaker after the Fed meeting. We expect the US dollar in a first step to become weaker and then probably will become stronger in the following future weeks. So, but we expect a more dovish than hawkish meeting. So, and second service we provide is we provide also, and this will answer your, or partially your question, who were you? Let me, Maku. We provide also some specific levels we call the max price level, which are in fact supply and demand level, where the price may possibly react, reversing or somewhat react. And so these levels may be considered as support or resistance level or supply and demand. And you see an example on the chart. And so these white or brown or colored horizontal line are such level where the price can react. And you can see in this example that the price has almost always nicely reacted on all these levels. And so they can be used especially as a profit taking or a partial taking profit level. So, and we do that for a lot of instruments, around 25 to 30 instruments. Now, in order to complete my part of the presentation, and after that I will give the mic to my friend Chris, let me give you some number about the performances of the max trading system. So as I have said, if we ignore the max advantage bias, the max trading system provides a winning rate around 70 to 75% on average. Sometimes it may be a little less, sometimes it may be a little higher. It depends also on the time frame, knowing that with higher time frame, the winning rate has a tendency to increase somewhat. But if we take into account the global context analysis, we will have less trade, but the winning rate will be way, way higher, between 90 and 95%. Now, in terms of number of trades and results, with the max primer, we get usually between 3 and 5 trades per day and per pair for the 3 sessions, ASEAN, European, and US session, 1 to 3 trades per day with the max standard. And whenever we get a winning trade with the max primer, the profit on average will be between 0.5 and plus 1 to 1. And a losing trade will be around minus 0.5 to 1, but to be more accurate, between minus 0.2 and minus 0.6 to 1. So the loss is always smaller, way smaller than the profit. With the max standard, we have better results. So the winning trade will have a result on average between 2 and 5 to 1, sometimes way higher, but not every day, of course, because when we get a trade of 10 hours or plus, this does not happen every day. It may happen 2-3 times a week, by the way. And the losing trade has a loss approximately the same size of the max primer, a little bit larger due to the scaling process. And when you calculate the expectancy with these numbers, you will see that the expectancy is positive in each case. This means that the max trading system is a profitable system. And so this is what the max is. And now to go into some more practical consideration about the max. So let me give the mic to Chris, who has some additional information for you. Chris, the mic is yours.
Thanks, Eusebio. Can you all hear me okay?
Yes, you are perfect, Chris.
Cool, thank you. Let me get the screen going. Okay, that one. You can see the screen okay? It should be there, yes?
Yes, Chris, perfect.
Okay, thank you. Hi, everybody. I'm Chris. I'm a partner with Craig and Eusebio for this 81st set of Max courses. As we've said, we've trained over 2,000 people since 2008 when Jim was around. Too far. What I'm going to go now through is to recap just a bit about what Eusebio went through. I know we're sort of pushing time here, but I'll do it really quickly. And then I'll go through the course features and benefits as well. And then after that, we'll get on to Craig's final part where he will give away a primer course and answer any questions that you might have. So what Eusebio just went through was a long bar presentation on how to manage them when you see them on this chart, information on divergence and the risk reduction using the stop loss, dragging the stop loss through. So if you want to go back through those, just back up the video when you get it, if you haven't got it already, and check them out. It pays to go through them 2 or 3 times because when Eusebio speaks, it's quite dense and he will flip over little words which have quite a bit of meaning in them. So if you find that you don't quite understand something, just send us an email or hit us on Skype and ask. No problems on that. Eusebio also showed you some example charts showing the profit boosting possibilities. And in one of the charts, I noted down that there was a, 6.3 times boost to the normal buy and sell method. So primer, we're offering 2 courses today. The primer course is simply you get into the trade and when the trade's over you get out kind of thing. The standard one lets you add to your trade as it's progressing at good points so that you don't damage your account. And by doing that, like I said, he was able to produce an increase in profit of over 6 times what just a regular buy and sell type system could do. And then he went through the Newswatch information, which is all free. It's all available on our website. If you subscribe to it, you get it updated every week. So no charge on that side of things. So where I'm here for is to sort of finally cement all this together. So we know why you're here. You want money so that you can have financial security, work from home, not have a boss, look after your family, pay off hospital bills, especially if you're in the States, or look after your retirement income. And what we've got is a method to help you get there. So one of the things that's traders think, well, this is where I'm going to ask you, some of you, to reply to this. So the Max people that are listening in on this already sort of know the answer, or hopefully. But when people say, I'm going to become a trader in the stock market or the foreign exchange or whatever, a lot of them don't really realize what their primary task is. So can you give me an idea on what you think your primary task as a trader is when you start trading? So you sit down at the screen and you see something set up. What's your first task? Risk analysis, says Anton. Okay, anybody else? Huge numbers piling in here. Okay, a lot of people, and when I sort of talk to people and say, yeah, I trade foreign exchange, they say, oh, well, can you predict what such and such is going to do? What's the dollar going to do in the next few minutes? And that's not actually what we're here about. Your primary task as a trader, and this is really important, it took me years to figure this out, all thanks to Eusebio. Lyle says to remove emotion is to take on risk. So if you imagine that you're the broker and you have you as a customer underneath you, what you as a broker want all your traders to do is to place bets with you. because if you're the broker and they place bets, then you're going to get a cut of the spread or the commission, and that's what makes you the money. So you want them to place a bet. That's it, nothing more than that. So the brokers want you to take on risk, and so your primary task as a trader is to assess the risk and then act on it, place your bet. And that's and being able to assess your risk, and that's what we're here for, is to your edge as a trader. That's what gives you the edge. So once you've placed your bet and you've taken on your risk, then what's your first priority? What's the very first thing that you have to do? If you think of it like driving a car, or better still, an aeroplane, if you're a pilot, when you're going to go up flying, you might notice that the pilots walk around the plane to make sure that there's 2 wings and a tail and some wheels and a propeller or a jet, something like that. So they've checked it before they take on their risk. And then once they're flying, what's their first priority? And that priority then is to minimize the risk. So they might get up there, flying around, and they see some heavy weather coming up, or they run out of petrol or something like that. What they have to do is they have to minimize the risk. And that's the same with you. When you're in a trade, you can't predict what's coming. You have to be able to minimize the risk and take avoidance measures whenever you see something. And as a result of that, you'll make a profit. And by using the max standard methods, you can maximize those profits. Anton, yeah, trade the plan. So hopefully the plan, Anton, has got risk assessment and prioritization and methods in it. So what we do at the Max to help you get there is initially we help you assess the risk so that we give you safe, high probability entry setups so that when you place your bet, you know you've got a good advantage when you get in there. And Eusebio's already mentioned that we have price patterns, indicator validation, context, using technical and global context to make sure you're going in the right direction and not against the market in general. And we also help you via practice sessions. So lots of weekend sessions. We ask you to do homework to make sure that you actually understand what we're talking about. Then once you're trading, we show you how to produce orders that are the correct order size, with the correct position sizing. We give you multiple exit strategies just in case something comes up. And we have a huge amount of precision with this. So for instance, if you're getting into a trade, you'll have something like a half a pip to maybe 2 or 3 pips on a 5-minute chart from when you see the setup to when you actually enter. And similarly for the exit size, with just a little bit more tolerance on those ones. And then the third part is we help you grow your profits. So especially with the max standard, we can boost your profits using the scaling in that Eusebio showed. We can quickly get you into a zero loss, even guaranteed profit situation by following our money management rules. So Eusebio kind of alluded to it in one of his charts, but when you're trading with the max, after a few bars, most times, not always, it just depends on what the movement's like, you can get into a situation where there's absolutely no way you can lose on it, unless there's, say, a black swan or something. Even if your machine powers off or you lose interconnect connection with your broker, you can still be in a situation where you don't lose, or you're actually guaranteed a profit if something bad like that happens. And we want to make sure that you let your profits run. I kind of joke about Eusebio being greedy, well, not being greedy, but he's super greedy. A lot of people will go just for 10 pips when they're trading, or 20 pips, because that's as much as they're comfortable with. But we're trend traders, and 10 pips is not a trend. 50 to more these days is getting into the trend side of things. So we do our best to help you stay in the trade and use up as much of the trend as possible to actually milk it. And especially with the standard session, standard trading, with all the scale-ins, when you get a nice long trend like that, you can really milk the pips out of it. So what we've got is, with the max method, is a really nimble system that adapts to price action, and that's pretty much thanks to Eusebio. The original version that Jim came up with was really good for trading back in 2008 when price would move for hundreds of pips at a time. These days it doesn't move that much, although it's kind of getting up there, but it seems to be quietening down again. But it's very nimble, and it can chop, go in the direction of the trend and counter trend very, very quickly. And we show you how to trade trends, breakouts, help you avoid chop and get into counter trend movements. Using Eusebio's companion bias indicator, that those two lines that were at the bottom of the charts, Eusebio's technical side of things gives excellent direction positioning. So when you're getting into a trade, you've got a reasonable good idea on which direction it's going in. A lot of people say, okay, which pairs should I be trading? Which direction should I be trading? We've got 2 or 3 different things which will help you figure out the direction, the bias. One of those is the indicators on the chart. Another one is the I'm sorry, I've gone blank here. And the third one, it'll come to me shortly, is the Eusebio's, and it's only for Max members. Once you become a Max member, you'll have access to his weekly trade directions, his weekly global outlook, to help you figure out which direction you should be trading in for that particular week on a particular pair. And in the standard course itself, we have something that Jim developed, and I've still not seen it around anywhere, even in 15 years, is Jim developed some dynamic support and resistance levels. They kind of foretell price levels that have got extra support and resistance from hours or days ahead, and they're really, really quite amazing. There could be a sudden shock in the market, like for instance, Brexit was one where the resistance levels worked quite well. Other ones are when suddenly the interest rate changes and price will move down to those support resistance levels and then straight back up. So you've got a really good idea on how far price will move and where you can sort of take your profit, or where you can actually hold in, or even if you're overstretched when you're getting into something, the resistance levels will help you determine that. That's only available in the standard course. And we help you minimize your risk hugely using the max money and trade management methods. Counterintuitively, once you see how things work, you'll find that with the standard, the more that you scale into a trade, the more orders that you put in, the less risky it becomes. So instead of what most people do is they place an order and then they stack extra orders on top, and suddenly they've got all these this money riding on a trade. With the max, when we do it, the more that you are actually placing your orders, the less riskier it becomes. And like I said before, you ended up with a situation where you come to have a guaranteed profit, even if the stops get hit, even if your PC goes out of action. Okay, so like I said, our training will show you how to get really precise and detailed setups on the M5. Like I said, a half pip to 3 pips. The half pip is generally during the Asian session. 3 pips is when things are moving quite well. We show you hard stops and trading stops and how to use those to manage and minimize your risk. And we also, which is kind of different to a lot of other training systems, is we ask you to do homework. I think this is really important, this side of things. The homework helps you speed up your learning, speed up your assimilation of the information that we give out, and deepens your learning. When you send what we do is we ask you to, we show you, here's a setup, now show us on a chart that particular setup. And so you send in a couple of examples. and it's probably me or Eusebio, which will go through the charts. And this third person view will be objective. We'll be able to say, oh no, you missed out on that. The setup pattern is 8 bars long, not 2. You forgot about the long bar that was set, that occurred just beforehand, which invalidates the setup. You forgot about news coming up, all sorts of things like that. So we can really hone in and sort of help you with your trading on that side of things. And we can provide you with more insights into the trading side of things. As you can see, there's a lot of benefits for actually doing this. It will help with your memory. When you're trading, it'll calm you down, so you've done a lot of rehearsal prior to actually doing the trading side of things. So you're much better set up when you actually do start trading. And when you do send the homework in, what you get back is personal feedback bar by bar on what you actually sent in. And sometimes there's extra tips and suggestions, because in the training we can't cover every different chart and every different trading aspects that's available. So there'll be some situations where, for instance, I'll see, oh, okay, your setup was perfect for what we've taught you so far, but there's an extra piece which we'll teach you called an anticipated divergence, which will stop you from getting into a trade like this, which turns back against you. And in the homework return, I send back those suggestions or tips or things like that. And because everybody else will be able to see your homework, they'll get those tips and feedback as well. On the weekends, we have regular practice sessions. There's no cost for these. Tomorrow's one, for the maxes, any maxes listening in, is a primer session. So what we do in them is people just ask questions about anything, and we, as in Eusebio, answers them. He's got a lot of knowledge about trading, and he answers all those questions, and then we'll pull up a chart or a homework that somebody sent in and go through it bar by bar and analyze the hell out of it. And if you have any questions once you've done the course, there's no problems asking them. I've been doing homework from people that did the course 1 or 2 years ago, and I'm still doing grading their homework for them to help them become traders. So there's no problems about that. Next part. So what you're going to get, as Craig mentioned at the start, is you get the full system, all the indicators, templates. There's no extra thing to purchase. We might have some extra indicators. For instance, we've got a money management package, but you don't need to pick that up. You might have your own already, and it's not necessary. You can do everything manually anyway. So everything is complete. Eusebio does all the training with all the precise detailed setups. We offer you one-on-one guidance if necessary. At times I've jumped on Skype and talked to people outside the class through their particular situations that they're having. And if you need your chart set up or something like that, I'm quite happy to help on that side of things. You'll end up with lifetime access to all the course materials and support. Just this week, we were asked by a gentleman who did the course back in 2014, I think it was, I've lost all my materials, can I have them again? So I think, yeah, Craig has dredged up all the videos and sent them back to him. So they're always there, and you're welcome to send in your charts and say, hey, I didn't do that. I've been trading, but things aren't working out for me at the moment. What's going on? And if you send your charts in, we can check them out to make sure that it's perhaps the market that's screwing you up. Because sometimes you can get into a pair that suddenly ends up with long wicks, like I was with the pound Kiwi, and you have to modify things slightly. So having somebody else, a third person, come in from the outside saying, yeah, you're doing things right, but it's the market. Maybe do this and see how that goes, which is what Eusebio helped me with. It can be really helpful. So we help you whenever you ask. There's no problems with that. And with the free stuff, we show you the best pairs to trade, news to avoid, news to watch out for. Like, for instance, the non-farm payroll could be a good mover, and the 3 interest rates announcements coming up this week could be good times to watch for. And we mark them in the news watch list under a magenta color. And we can supply you with price levels as well. Just a little sample. We have 2 levels of price levels. One which is a free one, which just gives price levels for 4 pairs. And then Eusebio has a subscription service, which does 25 plus different pairs and indices, metals, whatever moves, he will put a price level on it to help you gauge where price could move to and where price will move from. And when we're training, we use MetaTrader. If you've not come across it, pretty much every broker uses it. It doesn't cost anything. The data feed is free, and all our indicators are written for it, MetaTrader 4. And if you want to use our indicators on your particular platform, we're more than happy to supply you with the source code from the MetaTrader so that you can have the indicators recoded in your platform. We also have some of the indicators, thanks to Kent, for NinjaTrader, and they're getting a bit old now, but TradeStation and maybe one other. But people get the source code and make their own indicators for their particular packages. Okay, so what we're looking at here is when you take the courses, your results are going to be win-loss rate on the 5-minute chart, something like 65 to 85%. If you go up higher to the higher time frames like the H4, the win-loss rate becomes sort of up around the 90%. The average max profit on the 5-minute charts is around about 2 to 5 times whatever you risk. So if you're risking $100 per trade, then you'll end up with about $200 to $500 profit each time. And when you have a loss, generally the loss is half of what you've risked. So if you're betting $100, whenever you have a loss, it'll be about $50, just to give you a rough idea. And yeah, okay. So the standard course is about can be 30% to more than 300% more profitable than the primer course itself. So if you're already trading a system and it's working well for you, what you could do is take the standard course, incorporate some of the ideas from the standard course, and use that to boost your profits even further. And people that have taken the standard course have found that because of the profit boosting side of things, if they've been break-even traders, they're just sort of sitting at the edge, and some weeks they win, some weeks they lose, and they're not really getting anywhere. Because of the way it operates, scaling, push your profit boundary, and you become a little bit more confident, and so next time you make a bit more profit. And so the standard course is a way of sort of pushing over the profit, the break-even profit line into profitability quite nicely. It's nice. The primer course, it's a subset of the standard. It's not as profitable. Doesn't have the boosting in it. Doesn't have all the exits. It's quite a bit shorter, but it's still profitable. But it just doesn't have everything in it. The standard course is really good for learning from. The primer course, you get sessions to start with, and because you're not sort of immersed like the standard course, standard people pick up on patterns, the exits, and techniques more clearly and in more depth than the primer people do. So the primer people, it's profitable, but you have to work a bit harder for it yourself. With the support side of things, you get as much as you request whenever, and you will end up with a really powerful, safe trading method, or methods, depending on which one you take. And like I said, counterintuitively, with the standard, the more that you scale in, the more that you add on, the more that you boost your profits, the less risky the actual trade becomes. Okay, and the real benefit of all this is that you'll be able to achieve your goals quickly and safely. That's the whole point of doing this. It's it's not the money side of things, it's so that you can get what you're trying to get at. So the courses that we've got on offer are the Max Standard and the Primer. The Max Standard is 7 sessions. It's got multiple entry scenarios, about 12 of them, and the profit acceleration side of things. And like Eusebio was showing today, there was one chart there that showed 6 times more profit than the Primer side of things. And it's got all the exceptional trade and risk management. The Primer side of things is just 2 sessions. We run these 2 courses together, so Standard and Primer run for the first 2 sessions, and then Primer is left on their own. There is a bonus session, so with each one of these, instead of being just 7 sessions, it's actually 8. Instead of 2, it's 3. You get something like 3 basic entries and some exits, not as many as the standard course, but it is profitable. It's just going to take you longer to really boost your profits and to get wherever you want to go, whereas the standard can accelerate you there really quickly. The risk management side of things is basic, but it's really grounded and solid. There's no problems with it, and it's probably better than a lot of things that you may have seen already. Okay, and and Marku, in case you didn't hear, we do have indicators for Ninja, some of them, but we use MetaTrader for our trading platform. And Lyle says it's now on Mac. Okay, cool, Marku, thanks. So the standard course starts not this week, but the following week. Here in New Zealand, it starts on November the 10th. It runs for 7 weeks, and then there's a course after that, probably sometime around Christmas. The normal price is $2,999, but we've got a special running just for this course of $2,399. This will be the last course that we run for the year, and sometime moving into next year, we will probably be running another course. Depends on if Eusebio comes out of his surgery or not. I'm sure he will. It's kind of minor. But we won't be running the courses until quite well into next year. So the time is to decide is right now. The Primer course is, like I said, runs at the same time, just for the first 2 sessions. And then its normal price is $329, but the webinar special is $159. And like I said, this one is slower than the standard course. And here's the 2 together, so you've got some idea. If you decide, have a think about it, and you decide to take the courses, one of them, then the links are here, and I think Craig will be putting them up into the group. Yep, he's just popped them into the GoToWebinar chat, and they'll be coming through in emails anyway. That kind of concludes it from me. If you have any questions, please send them through. What questions do people have? Not many have come through here first. Rodolfo said, assess the risk. Sorry, Rodolfo, I didn't see you answer my question before. Okay. Lyle said something didn't talk about. Do you still offer discounts for multiple takes? Oh, yes. I should add that, should I? Shouldn't I? Yes, if you retake the course, then there's a huge discount, drops down to something like 60 to 75% of whatever the original price was. And if you retake one of our courses about 3 times, so that means you've taken the course 4 times total, then you can retake the courses after that at no cost at all. So you can just sit on them, get them by video. For people that are, and that's something else I should actually add, for people that are not able to attend the course, live, then the videos will be sent out sort of reasonably shortly thereafter. And like half of the people are at work or on the other side of the world when we're running our course. So we can't pick everybody up for a live course. And so those ones just do it via the video. The homework is still there. The results are still pretty much the same as if you set it live. So there's no problems on that side of things. So thanks for that, Lyle. I got asked, are there extra costs involved and monthly payments available? I think monthly payments or some sort of drip feed arrangement can be made if you contact Craig directly. He'll be able to do that. And like I said, there's no other costs involved. Eusebio, a question. What brokers do you recommend?
Oh, this is always a question which is often asked, but we do not recommend specific brokers because it depends on the country where you live. Each country has its own regulations, and each brokers in these countries have their own usual approach of trading. So it's impossible to advise a specific broker. You have to do your own diligence, and there are enough informations on Google. And if you look, for example, if you Google with a list of brokers, you will find a good list with a lot of reviews, objective reviews about brokers. So you have to know that you cannot use any broker. If you live in some countries, you will have a limited you have a limited number of brokers you can choose. And for example, if you are a US resident and you want to open an account with a European broker, it will be forbidden due to the regulations or the agreements between USA and Europe. So you have really to make your own due diligence to find the broker which may fulfill all your objectives. And what I often advise is do not hesitate to ask questions to a broker which may be a candidate. So any question you want to be answered. If the broker does not answer, be sure that it is not a good broker. But nowadays, almost all the existing brokers are honest brokers. They may have problems, of course, but they are honest brokers, and most of them will be extremely glad to answer all your questions.
Okay, thanks, Eusebio. Bronson has asked, at times I make trades because I'm anxious to get into a trade and then it goes against me. How do I stop this?
You will have trades going against you. Sometimes this happens to me too. And so this is why you have to consider in which direction you may trade depending on the global context. This will minimize the number of times when the price will go against you, and you need a good trade risk management, knowing that you will get losing trade. You have to embrace your losing trade. So do you know that even if you have an 80% winning rate, for example, you can still experience losing trades made of 5 to 8 losing trades in a row. 5 to 8 losing trades in a row with an 80% winning rate. And so the losing trades are almost always way larger than many traders consider. And so you have to take that into account. This is why the trade risk management and the money management are especially important to control the drawdown. The drawdown control is key to become successful on the long run.
Okay, thank you. Connie's asked, hey Connie, long time no see, do banks trade different order flow?
It depends on the banks. Many banks trade with levels, for example. They may include some indicators, and so it depends on the bank, and it depends on the habits of the banks and the way the bank teaches his trader to trade.
Okay. Thanks. Johnson's asked.
Order flow is just another tool. Order flow is just another tool to analyze in a more fine-tuned details the volume activity, for example. But among the banks I have worked with, I have never seen a bank using order flow. They use sometimes the order book but not order flow itself. But they use a lot of levels.
Okay, I hope that answered it, Connie. I didn't quite understand your question. Came through a bit funny.
Yeah, but I understand the question because, in fact, and this is something which is natural, so we are all looking for the holy grails. And from time to time, a new concept comes in. It has been in the 70s or the 80s, the market profile, recently the order flow aspect, the bookmark aspect, and quantitative trading. And so every time there is a new idea which comes up, and in fact, there is no holy grail, because what is the aim of this holy grail search is to try to predict what the market will do. And no one can predict what the market will do. So we need to understand those who create the movement, those who induce the movements. And if you understand their behavior, then you understand how to trade the market. And it's not necessarily, the secret is not necessarily in a specific tool.
Okay, another big question came through. My biggest questions are which timeframes to use, when to enter the trade, how to add to my position, and can you address trading while employed full-time?
This is a good question. In fact, I will perhaps disappoint you, but there is no one best time frame. A time frame which may be the best today can be a nightmare tomorrow. And so, in fact, you can use any time frame. And my advice is use a time frame which best suits your own time constraints. If you have a job, a 9-5 job, for example, so obviously you will not be able to trade a small time frame like the 5-minute time frame. You will have to choose a higher time frame like the 4-hour time frame, the 8-hour time frame, the daily time frame. So you have to choose the time frame which are in agreement with your own time constraints and your way of life, in fact. And then this will be the best time frame you can use. The best time frame is the time frame you feel comfortable with. And then in every time frame, you will observe that there are trends. Higher is the time frame, more fundamental these trends are. And so you will have also to better understand the global context associated with your time frame. And so with higher time frame, you will have to put much more attention to the evolution of the interest rates, for example, the evolution of the GDP, the evolution of the employment, and some other fundamental data, because these are fundamental, important driving factors of the market. And so you will learn also what are the patterns which helps you to define when such a trend starts. And the pattern we teach in the max are the same, whatever the time frame, in fact. And so, yes, so you need to be present on your chart to pinpoint when a trend starts. And this is the most difficult aspect in trading, because everyone, or many often traders consider that if they use a small time frame, they can trade 1 or 2 hours a day. But this is not true, because even if you trade the 5-minute time frame, a trend, when it starts, will last several hours, 3 hours, 4 hours, 6 hours, sometimes a little more. And so the best way to make huge result is to catch the trend at its beginning. But the problem is you need to be in front of your screen to catch the beginning of the trend. And the trend can start during the Asian session, it can start during the European session, it can start during the US session. In the Max courses, we give you some hints when a trend, we call them a true trend, start, and when they will exhaust. But still, you will need to be in front of your screen. Or you can choose to catch a small portion of the trend, but then it will be more difficult to use the scaling technique, of course.
Okay, thank you. That kind of answers the next question is, where did it go? How to learn to enter a trade at the right time and exit at the right time. I understand your charts.
How to learn what, Chris? I have not understood.
The person wants to learn how to enter a trade at the right time and exit at the right time.
Precisely by recognizing the specific entry and exit setup.
Yeah, and that's what we teach in the Max. So, yeah. Like I said, the standard course gives you something like 12 different entry setups. And a huge number of exit setups, and the primer gives you just 3 entry setups and a few exit setups as well, but enough to be profitable. But the standard just screams in profitability once you get it mastered and start using it. Another question, the biggest question I have is how much diversity is needed?
Oh, in fact, this is a question which is often a worthless question. We don't need to diversify. You know, when I trade myself, I trade usually maximum 2 trades simultaneously, sometimes 3 when one of the 2 trades or the 2 first trades are risk-free trades, but not more. But I always focus on the best pairs to trade. Because if we focus on the best pairs to trade, the best trending pairs, and this is why we give that information every week to our members, or it is also available to everyone. You don't need to be a Max member to read our news watch list page, and I hope that Chris or Craig will give the link of this page on our website. Yeah, in the chat panel. So if you monitor preferably the best trending pair, you will get very often nice trades. What I call a true trend is a movement having a minimum size in its length. And at least in the 5-minute or in the 15-minute time frame, if you take any of the best trending pairs, and we have 10, 11 best trending pairs, you will have such a true trend happening between 2 and 4 times per week on average and per pair. And so by monitoring several pairs, for example, 2 pairs, 4 pairs, 6 pairs, you will have plenty of opportunities almost every day. Even more opportunity than you can ever handle.
I have to modify that a little bit. Here in New Zealand, at the bottom of the world, and on the opposite side of the UK, my trading time is sort of Asian to early London session. So it's all afternoon work, early evening work for me. And so I don't catch all these big movements that are going on from the London session and the US session. So it depends on whereabouts in the world you are as well. There's still movements, but you just have to be aware that it's different to what Eusebio is talking about, because he lives right in the center of everything, and he gets up in the morning and it's office hours for him. So 8 a.m. to 5 p.m. each day is London open right through to London close. And some of the
that's why you have also to adjust, for example, which is not the only way, but for example, to choose the appropriate time frame depending on your time constraint. If you can trade only during the ASEAN session in a small time frame, and knowing that during the ASEAN session we have most of the time limited movement, so perhaps the small time frame during the ASEAN session is not appropriate for you, and you will have to consider something else. You have to comply to the way the market is working. The market is not working based on your wish, that you have to comply to the market behavior.
Okay, thank you. And thanks to Marco. He's asked, will we be sending an email invite for the live trading session for the non-farm payroll at the end of this week? Yes, we will. So you'll get an email with the link so that you can sit in on the webinar. And if you don't get it, send us an email. You should get it within 1 or 2 days before it actually kicks in. So no problems about that. So I'll just pop that in chat as well.
And the non-farm payroll is always an interesting situation, because the non-farm payroll is one of the most important economic report. And there are several reports, because the non-farm payroll itself relates to the employment change, but we must associate it with the unemployment rate. And it's also the most difficult news release to analyze, because we never know in advance what the release data will be. It's really one of the most difficult data to forecast. And when there is a big surprise, which is not necessarily the case every time, and we have observed that many times these last years, so the big surprises are rare, but when we have big surprises, we may have big movement in many pairs. And this may be a good opportunity to catch some nice trend. Now, if we don't get a big surprise, I don't suspect a big surprise during this non-farm payroll due to the economic data we have seen, for example, on the PMIs and so on. So many countries are in a recession, in fact, so I don't see a lot of improvement. But if we don't see a big positive or negative surprise, because both are good opportunities, I will force a trade. Forcing a trade means taking a trade we should not take. Just to illustrate an important aspect of the MAC, which is the trade risk management approach. So even when the context is not appropriate, the trade risk management can still make good or handle correctly any trade we want to take. But this is not enough to be profitable on the long run. Trade risk management and money management never transform a losing system into a winning system. But a bad one can transform a good trading system into a losing one. So we need to be extremely careful with the money management and the trade risk management. That being said, I thank you very much for your participation today. Sorry for Chris' voice breaking, but this sometimes happens with internet connections. Let's hope it will not be a major problems in the future, because it seems that there may be potential problems with internet in the future due to the global situation we are living. So thank you very much for your participation today, and see you either on our next presentation, which will be on Wednesday, but it will be simply a repeat of today, but mainly with our live session with the non-farm payroll, so November 4th, which will be a Friday. And so we will be in the room 10 to 15 minutes before the report itself. That being said, so I wish you a great weekend, keep safe, and so take care. Bye everyone.